When you think of the Australian economy, the Commonwealth Bank of Australia, CBA, stands out as the nation's largest financial institution. With a history stretching back over a century, CBA has grown from humble beginnings to become a financial powerhouse, deeply woven into the fabric of Australian society. Its influence extends far beyond simple banking services, touching nearly every aspect of economic life in the country. It's not just a bank, it's a central player in the daily lives of millions, especially in the home loan market. From students opening their first accounts to retirees managing their savings, CBA is a constant presence, supporting Australians at every stage of life. Its branches and digital platforms are familiar sights, serving communities large and small across the nation. As the top provider of mortgages, CBA shapes the path to home ownership for countless Australians. The bank's lending decisions can determine who gets to buy a home, how much they can borrow, and even the direction of property prices. For many families, CBA is the gateway to achieving the Australian dream of owning a home. Its insights and decisions ripple through the economy, influencing families, businesses, and policymakers alike. When CBA adjusts its lending criteria or interest rates, the effects are felt not just by its customers, but by the entire housing market and broader economy. The bank's research and forecasts are closely watched by government officials and industry leaders. When the Commonwealth Bank's CEO raises concerns, it's a signal that can't be ignored. The words of CBA's leadership often set the tone for national conversations about finance, housing, and economic stability. Their statements can influence public confidence and even government policy. Recently, the head of CBA made a statement that sparked urgent questions about the future of housing in Australia. The announcement has captured the attention of homeowners, potential buyers, and investors, all eager to understand what lies ahead for the property market. The bank's unique vantage point, built on vast data, means its warnings carry real weight. With access to millions of customer accounts and transactions, CBA can spot trends and risks before they become obvious to others. This makes its analysis especially valuable in uncertain times. When CBA speaks, it's not just about profits, it's about the financial health of the nation. The bank's role as a steward of economic stability means its actions and advice are crucial for safeguarding Australia's prosperity. That's why the CEO's recent caution has sent shockwaves through the financial community. Investors, analysts, and everyday Australians are all paying close attention, knowing that CBA's perspective could signal major changes ahead. Today we'll unpack what this means for the housing market and for every Australian. Whether you're a homeowner, a renter, or simply concerned about the nation's future, understanding CBA's role is more important than ever. Let's dive in. In a recent and closely watched parliamentary hearing, CBA CEO Matt Comyn delivered a message that caught many by surprise. He stated that home loan demand in Australia is simply too high. This wasn't just a passing comment, but a clear and deliberate warning from the head of the country's largest bank. For a bank whose business model relies on lending, such an admission is both bold and unusual. Banks typically celebrate strong demand for loans, as it means more business and higher profits. But Comyn's remarks signaled a deeper concern about the direction of the housing market and the broader economy. Comyn warned that surging demand is pushing property prices ever higher, making it increasingly difficult for new buyers, especially young families and first-time homeowners, to enter the market. The dream of home ownership is slipping further out of reach for many Australians, as competition intensifies and prices soar. He called for a more sustainable pace of borrowing, urging both the industry and policymakers to prioritize long-term stability over the temptation of short-term gains. Comyn emphasized that responsible lending practices are essential to ensure the health of the housing market for future generations. His comments were a direct signal to policymakers, an unmistakable message that the housing market is at risk of overheating. Comyn's testimony was a call to action, urging government leaders to consider new measures to cool the market and protect vulnerable buyers. Comyn stressed that while CBA may benefit from the current boom, unchecked growth could ultimately threaten the stability of the entire economy and undermine fair access to housing. He highlighted the growing divide between those who can afford to buy and those who are being left behind. Rapidly rising house prices, fueled by easy access to debt, create significant risks if economic conditions change. A sudden downturn could leave many homeowners exposed, with high levels of debt and falling property values. The CEO's warning is about protecting the future, not just the bank's bottom line, but the financial well-being of millions of Australians. Common's message was clear. The choices made today will shape the housing market for years to come. It's a call for balance and responsibility before the situation becomes unmanageable. The hope is that by acting now, Australia can avoid the mistakes seen in other overheated property markets around the world. When the country's biggest lender urges caution, it's a signal that cannot be ignored. The stakes are high, and the consequences of inaction could be severe for families, communities, and the nation's economy. The message is simple but powerful. Sustainable growth matters more than record profits. It's time to put the long-term interests of Australians first. Matt Common's concerns are backed by hard data. In the third quarter of 2025, new home loans jumped 6.4%, a powerful surge. CBA's mortgage book alone grew to $664.7 billion, outpacing the economies of some nations. Other major banks also reported strong growth, showing this is an industry-wide trend. The Reserve Bank notes that housing credit growth now exceeds post-GFC averages. Much of this surge is driven by property investors, adding even more competition for first-home buyers. The cycle is clear. High demand fuels more lending, which in turn drives even more demand. The question: can this level of debt be sustained by Australian households? The numbers suggest we're in uncharted territory. The connection between home loans and house prices is straightforward, but its impact is profound. When more buyers have access to larger loans, they can afford to pay more for the same properties, which naturally pushes prices higher across the market. When banks make borrowing easy and interest rates are low, suddenly a much larger pool of people can enter the market. This increased competition for a limited supply of homes means buyers are often willing to stretch their budgets, sometimes borrowing to their limits just to secure a property. The result? Bidding wars become common, with sale prices frequently soaring well above the original asking price. Sellers benefit, but buyers face mounting pressure. As house prices climb, future buyers are forced to take out even bigger loans, locking themselves into higher monthly repayments. This cycle of rising debt and escalating prices feeds on itself, making it harder for people to break in. For many, especially first-time buyers and young families, this loop can quickly spiral out of reach, making homeownership feel impossible. The dream of owning a home slips further away as affordability declines. The risk is that the market becomes driven more by speculation and easy credit than by the true value of the homes themselves. Investors may jump in, hoping for quick profits, which only adds fuel to the fire. If this bubble bursts, homeowners could find themselves owing more on their mortgages than their properties are worth, leading to financial distress and even foreclosures. That's why experts like Matt Common and many economists are sounding the alarm. They warn that unchecked lending and runaway prices could destabilize the entire housing market. High demand for loans isn't just a sign of a strong economy, it can also be a red flag, signaling that the market is overheating and vulnerable to sudden shocks. The real challenge is finding ways to break this cycle before it leads to widespread hardship. Solutions might include tighter lending standards, more housing supply, or policies to support first-time buyers. Sustainable lending practices and responsible borrowing are essential for a healthy, stable housing market that benefits everyone, not just investors or banks. Otherwise, the risks of easy credit and soaring prices could outweigh the rewards, leaving many Australians vulnerable when the market shifts. What's fueling this rush for home loans? It's a mix of factors. Historically low interest rates made borrowing cheap, encouraging many to buy now. Home ownership is deeply rooted in Australian culture, creating pressure to get in before prices climb higher. Fear of missing out, FOMO, drives buyers into the market, even as prices soar. Investors, seeking better returns than savings accounts, have piled into property, intensifying competition. Population growth adds constant demand for housing. The result, a perfect storm of financial incentives and social pressures. It's not just about logic, it's about emotion and opportunity. That's why demand remains sky-high. Interest rates are the linchpin of the housing market. For years, record low rates made home loans cheap, supercharging demand. But with inflation rising, the Reserve Bank has hiked rates, making borrowing more expensive. Monthly repayments are up, and new borrowers can't access as much credit as before. CBA's CEO predicts rates will stay high through 2026. Don't expect relief soon. Higher rates act as a natural brake, forcing buyers to reconsider what they can afford. While demand is still strong, it's expected to cool as the reality of higher costs sets in. The era of easy money is over. This shift could bring much-needed stability to the market. The message plan for a tougher borrowing environment. The market is adjusting, and so must buyers. Why would a bank want less borrowing? It's about balance. While high loan demand boosts profits, it also raises risks for customers and the economy. If too many borrowers struggle, defaults rise, and that's bad for everyone. CBA's warning is about long-term stability, not just short-term gains. Responsible lending protects both the bank and its customers. Regulators are watching closely, ready to step in if banks fuel a bubble. By advocating caution, CBA positions itself as a responsible industry leader. It's a strategic move to build trust and avoid future crises. The goal is sustainable growth, not reckless expansion. So what's next for Australia's housing market? Expect a slowdown as higher interest rates bite and borrowing becomes tougher. Prices may stabilize or grow more slowly, with some areas seeing minor corrections. Investors chasing quick gains might pull back, easing competition for first-home buyers. The market could shift from speculation to meeting real housing needs. But the future isn't set. Government policy, population trends, and global events all play a role. The key message, caution, and balance are needed to avoid a painful correction. By acting now, we can steer towards a more stable, accessible market. The hope: a fairer housing future for all Australians. Housing isn't just an economic issue, it affects every Australian's life. Soaring prices and debt shape where we live, what we can afford, and our future security. When the market becomes unaffordable, it threatens social equality and quality of life. The CBA CEO's warning is a wake-up call. The current path isn't sustainable. A healthy market lets people buy homes without crippling debt or anxiety. For buyers, it's a reminder to be cautious. For policymakers, a call to ensure fairness. This is about more than numbers. It's about the society we want to build. The goal: responsible lending, stable prices, and real opportunity for all. The conversation sparked by CBA is a step in the right direction. It's time to focus on what matters: a fair, stable housing market for every Australian.